when I bring in this point of interest rates in the US, and I think the last 45, 60 days, I think I've seen the sharpest turn in expectations. I mean, I remember coming into 2026 talking about 2 or 3 rate cuts, and now we're actually talking about 2 rate hikes, if not more. And a lot of this seems to have come with the new chairman over there, and he seems to be talking a very different language. He seems to be talking about price stability, and just looking at some data, I don't think US inflation has ever hit the target in the last 5 years. So now we are talking a very different language in the US. So, and indeed, I think the dollar index has reacted to that, and gold has reacted to that. So if I were to kind of therefore look at interest rates globally, and I'm going to talk about India separately because that seems to be following a different trajectory. When I talk about global rates, how are you viewing the Fed rate complex and the rest of the world? Because Europe, Japan, everyone seems to be hiking. Fed is still holding on, but 2 more rate hikes likely. How are you kind of viewing that piece? And from an equity valuations perspective, I find that to be an important anchor for me in this discussion.
No, I think it's very clear that the rate environment and indeed the stance of the US Fed has clearly changed. In his previous policy announcement, which was his first announcement, the new Fed chair prevailed over an MPC equivalent there, where you had 9 of the members actually talk about rates being too low, and the next move should be a rate hike. So I think it's very clear there the situation has changed. And therefore that's getting reflected, like you said, in gold prices, silver prices, all commodity prices actually, the US dollar. And this is not only US phenomenon, but you're seeing that in Europe, and look at what's happening in Japan. The currency has hit a 40-year low, and that's primarily because the rate differentials are too low, which means that Japan needs to hike rates as well. So I think the rate cycle globally seems to have turned. And I think the last shred of doubt that the markets had was really around the Fed's credibility and the ability of the Fed chair to push through his objective professional view through a White House which is very, very vocal in terms of what it wants. And I think that's where yesterday the Supreme Court judgment around the previous supposed indictment of previous Fed member kind of restored this credibility that the Fed is indeed independent and is empowered to take a professional and objective view. So I think all of this seems to kind of suggest that like the markets are expecting, there is a 75 or 80% chance probability that the market is ascribing to a rate hike by the end of the year. So I think at least 1 rate hike. So you probably could have 2 as well by the end of the year. So I think that picture is clearly changed. Now the other dimension to this, and which is what Mr. Kevin Walsh has been speaking about in the past, is his fixation on controlling the size of the Fed's balance sheet, which has an implication for global liquidity.
Liquidity, correct.
And so both of these are from a sentiment perspective, kind of headwinds for risk assets.
Including equities, therefore, I would.
Absolutely. And therefore, that's something that we'll need to watch very carefully, because some of this, kind of the development is slowly kind of picking up in the background. And suddenly, something happens one day and then the world just wakes up to a completely new assessment of the environment. So I think we should watch some of these moving pieces very, very carefully.